up and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Have your YouTube video quality set as high as possible. That way you can read the numbers a whole lot easier. Have a calculator on hand so we can do some easy math. If you have a question or a stock you want to go over together live, leave it in the comments section below. And finally, remember, this is not financial advice. This is all for entertainment purposes only. All right, everybody, happy Monday. Hope you had a great weekend. Let's check out our open positions. First up, we had our Netflix short call spread for March expiration fill on Friday. So trying to get to 82. We were up big already on this position. Our cost basis was 165. Right now it marks at 120. So we're on the right track there. Our short call spread on EFA is green today, down marginally $8 on this one. Our short call spread on the ETF of the semiconductors, trying to get to 27. We're a little under on this one, down slightly, but we've got till March expiration on that one as well. And finally, our roll of XBI to January and February. Short call spread on that one as well. We got a lot of work to do on this one, but don't forget, it's February expiration. We've got a couple weeks here still ahead of us, okay? All right, only 4 positions that we have in our portfolio. Let's see what new opportunities we have today. First up, iRobot, IRBT. Their deal with Amazon has fallen through. So let's take a look. Some higher than normal volatility. Okay, Amazon scraps deal to buy maker of Roomba. Again, here's a look at our chart. Support, let's take a look at the weekly to see if we can find support. We have to go back a long way here. Around 1350 maybe. Got support back here from 2009, 2010. Okay. So 1350. If we want to sell the put side, go back to the daily chart. For March expiration, we got a little bit of volume here on the news. You'd have to go out and sell the 10. Liquidity's not the best here. A lot of open interest. Some volume as you get here out farther at the 10, the 9, and the 8. But again, liquidity's not not what we're looking for, okay? So liquidity is very important when you're opening a trade, so it can get filled easily. You can roll it if you get into trouble, or close it if you want to go that route. So close on this one, but no cigar, okay? Next up, SoFi. SoFi announced their earnings, I think, this morning before the open. Yep, the 29th before the open. Very positive reaction. The stock up almost 22% on the news. Let's see what we got here. Ascending trend line here. It's now probably going to close above the 200-day. Could catch resistance around 950. Next stop resistance would be around 10. So let's take a look on the call side. Look at this volume today. A lot of volume, a lot of open interest. Good liquidity. If you sold the 11 and bought the 13, let's do the math on that one. Take 36 minus 12 divided by 2 divided by 200. That's 6% right there. That seems very fair. The 11 is right here. Okay. I think what we'll do on this one, Since it's got everything we're looking for, let's wait a day or two, say maybe Tuesday or Wednesday, see if we get any upgrades that happen, which will push the stop up some more, and then look at the call side. So, SoFi, we'll follow up with all this week, okay? If it's a down day tomorrow, we'll scrap it. The move's over. But if we have another up day, say to around 975, 10, if it gets to around 10, then we'll look at selling the call spread. Let's hold on tight for this one, okay? Close. I like this one a lot. Next up, Colgate got an upgrade, I believe, today. So earnings were Friday, big monster day on Friday, and then an upgrade today. That's given it more legs and some room to run. Deutsche Bank, Wells Fargo maintains at equal weight. Raymond James upgrades. So there we go. Some good news on Colgate-Palmolive. Here's our chart. Let's zoom out here. It's going to hit some heavy resistance or between 84 and right now 83.75. A lot of resistance from back here in 2020. Okay, so it's had this big rally up since October. 3 big days in a row. We could look at the call side today. You'd have to sell 87.5. 0 volume though here. Look at this. No volume. You don't really get paid for it. Take this one off the list. Moving on, Dollar Tree, DLTR. I think there was a note out on them today. Yeah, JP Morgan had a note out on them today. Very bullish. And an upgrade to overweight. Okay, good. Volatility is awfully low on this one. IV rank 21. This blue line is down here. So I'm not sure there'll be much of a move to make, but man, bad earnings back in August of last year has rallied all the way back and then some. What's good about this is post earnings, if you sold puts here, obviously they went way against you. If you kept rolling from August till around November, August, September, October. So if you kept rolling for 3 months, you eventually made your money. Isn't that crazy? So even if you sold puts on this day after earnings and you were a big time loser, if you kept rolling and rolling and rolling, you made your money. You just had to hang tight and wait. It's incredible. So, but for today, let's focus for today. Already selling off on the news. Let's look at the put side. If you sold the 115, I don't even think you need to do the spread here. Just sell the 115 straight out. Earnings in the 28th, so we got exactly a month till earnings. Liquidity on the 115 is not bad. Where's 115 on the chart? 115 is down here. This is all very fair. I wouldn't mind taking this one. We'll come back. I'll mark this one. Put side for Dollar Tree. Okay. I like this one. Tesla's next, TSLA. So we had this. Let me zoom out here. Post earnings move, gap down. A lot of selling has already occurred. It could be catching its legs for its next rebound. It's trying to, it has this channel going. Downward trend line, a downward trend line. So it could catch a bounce here, moving back up. For March, Tesla, personally, I would rather do a put spread on this one than the actual put. Sold 155 and bought 150. Let's do the math. What the hell's going on with the tie here? There we go. 218 minus 162 divided by 2 divided by 500, 5.5%. For a put spread post earnings, it's not bad. Good liquidity. We got a 2-cent spread here and a 2-cent spread here. Very liquid. If you need to get in and out, if you need to roll this, it's going to be a piece of cake. A lot of open interest down here. Okay? 155 on the chart. Where's that? 155's down here. Even though we're post earnings, we don't have a lot of calls like upgrades and downgrades, so that's interesting. We would have thought that at this point, we're 3 days after earnings, we would have had some kind of word from anybody. Nothing. Come back and look at the put side too on this one. What is a little concerning is we have, according to E-Trade, IV rank of 0. And we do have a spike up here in volatility, so things are more expensive than normal. Historically, that is. 155, everything looks right here. I can go ahead and open this one. Let's just do it. All right, put spread for Tesla, okay? I'm going to sell the 155 and buy the 150, okay? For March expiration, 155. Hold on, I got to change this to 5. $155, 150 is right here. Go for, I saw 59, let's take 59. 59 divided by 2. 59 divided by 2 divided by 500. That's almost 6%. I'm okay with that. All right. Buy 1 March 150 put and sell 1 March 155 put. Receive a credit of 59. Let's preview this. Double check your ticket. Buy 1 Tesla March 150 put to open. Sell 1 155 put to open. Receive a credit of $59. We'll go ahead and send this one out. We'll hang tight here. All right, moving on. Norfolk Southern, NSC, downgrade I think today. Earnings were on Friday. I think it was a downgrade. They've already rallied back, so the move may already be over on this one. Earnings on the 26th. Yep, correct. BMO maintains market perform. TD Cohen downgrades. Morgan Stanley downgrades. So we got a double downgrade this morning. That's why they opened up down. But like I said, they've already rallied back. Volatility is quite low on this one. Volume is too low. Liquidity is too bad. Let's move on. Sorry, the tie is annoying me today. There we go. Okay. Next. Warner Brothers Discovery. The Zaz. Earnings are on the 22nd of February, so we're less than a month away. I think it was a downgrade. No news is loading. I'm pretty certain they got downgraded today. I'm not sure by whom. Volatility is awfully low. Here's your chart. ascending trend line here, here, and here. So I don't know if you can see it. Ascending trend line here, descending trend line here. It looks like there's more momentum to the downside. And I don't know how much confidence I have in David to fix this train wreck. I think we're going to skip this one. Put side, you'd have to sell the 10. It's too close. Call side, you'd have to sell the 12.5, and that's too close as well. Let's move on. Next. Pioneer. Is that the right stock? Did I mess this one up? Skip this one. American. AAL. Earnings are April 25th. Good, we're past earnings. Citi upgrades them today. Look at the volatility here. So historically, volatility is high. It shows IV rank of 0. So let's see what's going on. Post earnings, we've pretty much gone nowhere, so there probably isn't a lot of volatility in this one, despite the upgrade. Put side, you need to sell 13. You don't really get paid for it. You kind of do, but not really. On the call side, you'd have to sell 17. I don't know if I'd sell the put side on this. I like Delta better of all the airlines. I wouldn't sell the put side here. Speaking about airlines, let's look at Spirit. What's going on with them in JetBlue? Looks like Spirit's getting some footing down here around 550, 560, but I don't know if I'd warrant selling the put side. No. 5 is too close and the 250 is too far out. If you sold the 250, you're risking $250. You get credited. Let's say you got the ask at 20. 20 divided by 2 is 10 divided by 250, 4%. Not worth it. Okay, moving on. We already looked at Tesla. Let's look at Wayfair. This is a follow-up from last week. Post-earnings move. They announced some layoffs. They have their earnings done already. Still IV rank of 72. That's not bad. Hanging out right here at the 200-day. When were their earnings? Earnings are coming up on February 22nd. What was nice about this one is these are all very expensive and good liquidity. However, I think we now are at the point where we're too close to earnings, so we may have to hold on this one now till after earnings. February 22nd, so today's January 29th. February 22nd, it's included in, so let's take a look at the IV for this, for each expiration. You see the big jump up here. This is the week of expiration, so it'll have the most volatility priced in. And as you trail off, it goes down, down, down. So here's March is what we're trading now. So there is, compared to the average, some heightened volatility. But I don't know if I'd want to hold this one through earnings. You do get paid for it, so you're taking that risk, and you do get paid for it. Wayfair, I would definitely do a put spread, not just a straight out put. If you sold 40 and bought 35, what do you get? 115 minus 52 divided by 2 divided by 500. 6.3% there. So, yep, you're getting paid over 6%. You'll probably get paid closer to 7% if you get filled at the ask. So that's really good for a put spread. You know, usually call spreads pay something like that, but for the put spread, that's really good. The only payoff is you have to hold through earnings, and that's a coin toss. But you definitely have the heightened volatility priced into these options for earnings. So keep all that in mind. For me, since we're so close, I'm going to hold. But this one's really tempting too. Okay? Netflix. We already opened our position, so I'll take Netflix off this list. We got filled on Friday. SoFi will follow up. Let's look at the IWM. Waiting for it to get to around 210. Obviously not there today. Waiting for it to get to around 210, which is up here on the chart. The reason for that is we've got a ton of resistance from back here, going all the way back from January of 2021 all the way through December of 2021. So we've got a year's worth of resistance coming up at 210. So if it breaks above this peak back here in December, we're going to 210 and we'll have a good pullback at 210. So if we get to 210, we'll sell a call spread, and this one will be pretty straightforward. Okay? You've got 1, 2, 3, 4, 5, 6, 7, 8 or 9 points of resistance right around anywhere from 208 to 213. So hence I picked 210. Seems to be a good spot right in the middle. Okay? Just so you know the game plan on that one. Intel's on the list for some reason. Let's check it out. INTC. No, they're down today. Okay, so gap down after earnings last week. Down again today. Maybe a downgrade. No news yet. Of all the semis, Intel is one of the worst. Hence, but it's very heavily weighted in this ETF that we sold the call spread on. Hence, it's up today. Or our position is up today. The ETF is down, but our short call spread is up today. Let's take a look. SMH, and we'll go back to Intel. Flat. You gotta remember it does include things like AMD and Nvidia too, but we're short on this trade. We're short the 200 on the call side and long the 205. So we got some room to run here. We got some time too. This is March expiration. Okay, but let's go back to Intel, see what's up. INTC. Obviously, look at the put side, just because of its downward movement, and you see this big jump up the blue line, higher volatility now than historically that it's been. So that's good for option prices. That means they're more expensive, and when things are expensive, you want to sell them. Okay. IB rank at 31. I don't know if I believe that. Let's look at the prices on the put side. Yes, considering this is post earnings, these are relatively expensive. You sold 38. I don't know if you need to do the put spread here. 38 is down here. For March expiration, that seems very fairly priced. We're going to catch support, possibly a bounce around 42.50, which is awfully close. I wish it could get down further to 40. I'd sell, if it can continue down to 40, actually between 40.75 and 40 on the nose, I'd be interested in selling the put side. We're not there yet, okay? Dividend on Intel is only 1%. Their PE trailing 12 month is 115. That's really bad. So, can this continue to burn off? Yeah. I wouldn't sell the puts yet. I think it could easily, just judging by this trend line here, it could easily get back to the 200-day around 36, 37. And there's good support here around 37. You've got peak support, and you've got your 200-day. So this can continue down a long way. So I don't know if I'd be comfortable selling puts yet here, knowing all that. Okay. We'll continue to monitor Intel. All right, let's go to our IV ring scanner. Let's sort by volume. We have a very busy week ahead of us. We've got a lot of earnings. We've got the Fed meeting on Wednesday. That should be good. We've got, I think, jobs report on Friday. February's almost here. January has been a really good month for us. SoFi we already looked at. NVIDIA on the 21st. IDM we already checked out. Let's just skip some of these earning people here. We've got Apple, AMD, Rivian, and Lucid. Intel we just talked about. Earnings everywhere. Palantir earnings, Baba earnings, Pfizer and Google on the 30th. Carvana on the 22nd. Too close. Disney, they'll report on the 7th. PayPal earnings. IBM. Hey, let's look at IBM. Where their post earnings, they've gone crazy parabolic. Look at this parabolic move from the bottom in October. They've gone from 135 all the way up to 196 just because they said the word AI. Let's take a look at the weekly. We may actually have missed possibly selling the call side here. So it got all the way up to 197 and see all these peaks from back in 2012. That's where it hit resistance and is sold off. And now it's down to 186 at this point. Look at this big jump in volatility. That's going to make things expensive on the call side. However, we may have already missed the move. If you sold, if you sold 200 and bought 205, what do you get? $200 is 92 minus 55 divided by 2 divided by 500, 3.7. Skip. Not worth it. Maybe on the put side. I don't know if I'd want to sell the put side though. No, skip it. FXI, that's China. I know Evergrande's in some trouble today or over the weekend. News came out. iRobot we already looked at. Ford, Square, Boeing on the 31st. No. Warner Brothers Discovery we already looked at. DraftKings on the 15th. Close. Airbnb. When are their earnings? Maintain overweight at Barclays. Earnings on the 20th. Not a lot of volatility here. No. Skip this one. Exxon, we got the oils coming up later this week and into next week. Uber, no. Nike, no. Upstart on the 13th. Earnings. Wells isn't on this list. Keep going. UNH, still heightened, but it's a $500 stock. It's going to make it awfully hard to fill. Earnings for UPS, Walmart on the 20th. Starbucks on the 30th. USO Oil. Let's check out oil. More shenanigans in the Middle East and Jordan over the weekend. Oh, let's look at the daily. This is the weekly chart. My bad. Okay, so let's see. What do we know about oil? So the Middle East, over the weekend, there was an attack on U.S. soldiers by Iran proxies. So we know there's going to be a response. We don't know what the response is going to be yet. So a response in the oil market in the Middle East is slightly priced in. We just don't know what the response and how big it is. So that is not priced in. If the U.S. responses is bigger than what is the market is already pricing in, the oil market that is, this thing will go up. Okay? I wouldn't short oil anytime soon. So that means no selling call spreads. Puts, you have a good argument of selling puts right now. The only way oil is going down is if we head into a very large global recession, which is possible, obviously is possible, but that's the only way oil is going down. Your risk is to the upside. Puts. These aren't very expensive. Bad liquidity too. 20-cent spread here at the 63. I'm surprised. Let's look at XOP. On the put side as well. Really quick at the chart here. What about, let's see. Good liquidity at the 121. Let's look at XLE. I'm surprised that the volatility that's being priced into the oil market isn't higher. Ivory Inc. of 24, which is very low. Historically, volatility is low. Interesting. Let's skip this one. GD, no. Nope. Roku, I think we have Roku earnings coming up. We trade them almost every earnings cycle. ROKU. Traded the last time after earnings here. Was a very long trade. Traded them after earnings back in July. That was an easier one. Back in July, I don't know if you guys remember, we sold the call spread, moved down. That was a fast one. We did the same thing back in November, sold the call spread, but it moved against us. The whole spread was underwater. It took all the way till, I can't remember, maybe December to have it filled. We rolled it at least once, if not. Yeah, we rolled it till January expiration. So their earnings are the 14th. Same thing, we'll wait till after earnings, see what happens. Digital World acquisition, no. Too illiquid, right? GameStop, no. Nope. Roku, we already checked. Chewy? We looked at Chewy last week, I remember. I think we have earnings. And I think there was no movement. That wasn't what it was. Enphase on the 6th. Shopify on the 13th. We're too close. Avago, Broadcom. Walgreens is still up here, even though we're post earnings, but it's a $22 stock. There'll be nothing to do. Cleveland Cliffs today after the close. Okay, we'll follow up tomorrow. We got a lot of earnings this week. I know I already said that, but we do. We'll have more opportunities as we get to Tuesday through Friday. Bristol Myers on the 2nd. Celsius. I know we looked at this one, what, two weeks ago? Earnings are on the 28th. We still have some heightened volatility here. Put side. Okay, now this is interesting. It's hitting the 200-day. It's bouncing slightly. We do have good support here. Going back to July of 23. You can make the case for selling the put side here. Selling the 40 gets you... I'd sell the put spread here. Sell the 40 by the 35. Yeah. 73 minus 27 divided by 2 divided by 500. Only 4.6% there. I don't know how crazy I'd be about selling the puts right out. Where's 40 on the chart? 40's down here. That makes sense. Seems to be very fairly priced. You are holding through earnings, though. That's why. So your earnings is right here for the weekly of March 1st expiration. But that only gives you 2 weeks after earnings in case things go against you. I'm not crazy about this one. Everything looks good, but we're too close to earnings. Rumble too low. On semi on the 5th. Ultra. Roblox on the 7th. ADM's coming back. Good for them. We still don't know what's going on with their CFO. ARM on the 7th. Unity on the 26th. Too close. Boyle Qualcomm on the 31st. Okay. Let's go back really quick. We'll look at Dollar Tree. On the put side. Earnings on the 28th of February. So we got exactly a month to get in and out. Looking at the put side here. So it's almost at this perfect spot where it's coming back. All the gains from today's JP Morgan note have sold off. Getting close to the 200-day. Possibly get a bounce here. Let's look at the put side at the 115. We have a 6-cent spread here. That's not bad. I think we'll try to open just the put, not the put spread. What was the put spread paying? 137 minus 82 divided by 2 divided by 500. 5.5%, 6. Actually, no, we'll do the put spread because I don't want to eat up so much. Good Lord. What's the word? I don't want to eat up so much capital. So the 115, 110 on Dollar Tree. $115, $110, right? $115 on the chart. Way down here. Please be aware earnings are a month away. Okay? Talking to myself there. 115, 110. Actually, hold on. Let me look at one thing really quick. 8-cent spread here, 4-cent spread here. Hold on one second. If you take 83 minus 49 divided by 2 divided by 500, that's worse. Liquidity on this one's okay. That's my only concern here. It's not bad. It's not ideal. Like, look at the 105. You got a 3-cent spread here. That's not bad. I like that. 4-cent spread here, 3-cent spread here. That's a 7-cent spread on the entire short put. It's a little... Let's just go ahead and do it. Quit whining and just do it. 115, 110. Is that right? Or the 110, 105? What's annoying me is the spread here at the 115 strike. I think what I'll do is just sell the 110 as a put, not the spread. I don't know. It's all 115, 110. 37. Keeps changing. 115, 110. $57 divided by 500. Sorry, 57 divided by 2 divided by 500. 5.7%. It's not bad. This is Dollar Tree. I'll go ahead and send this one out. Okay, so we'll buy one March 110 put and sell one March 115 put. Go for the ask of $57. Limit credit. Preview this. Double check the ticket. Sell one March 115 put to open and buy one 110 put to open. That's a $500 spread. Receive a credit of $57. We'll send that one. Hold on. Son of a gun. Liquidity on this one's a little wonko. Take this to 63, okay? 63 divided by 2 divided by 500, 6.3%. Okay, sorry about the confusion. Keep this at 63 as the limit credit, okay? Preview this one more time. This one doesn't get filled. I really don't care. Sell one 115 put to open. Buy one 110 put to open. Receive the credit of $63 now. We'll go ahead and send this one out. Okay. Let's review. If this Tesla put spread gets filled, we will set a buy to close, good till canceled, limit debit of 29. Okay? If this Dollar Tree spread gets filled, we will set a buy to close, good till canceled, limit debit of $31. Okay? Sorry about the confusion on this one, or it's just the spread's not. Liquidity is right on the border here. The liquidity is not bad, but also it's not great. So it's been a little frustrating on figuring out the strikes and what to open it at. Okay? Something like Tesla, the bid ask is $48.50. That's a 4-cent spread. That's nothing. That's great liquidity. This Dollar Tree one keeps changing. The bid ask, you know what? Now the bid ask is $29.58. I'm gonna cancel this one. The liquidity's not good. Whenever you're opening, there's a step-by-step thing you're doing when you're opening these positions, okay? So number one, first and foremost, where we start all of our trades is price movement, which means volatility is heightened. If you don't, you always want to sell something that has high volatility, okay? It's an important lesson here of why we cancel this order. You want first high volatility because you're a seller. When volatility is high, these option prices are more expensive, okay? When things are more expensive, you want to sell them and then buy them back at a cheaper price when volatility is kind of cooled off, okay? Then you're looking at the right strike, which is out of the money always. And then finally, you want liquidity. Liquidity is very, very, very important. It makes things easier as far as management goes. You know, we've had to roll this XBI. We've rolled some SPY trades. We've rolled that Boeing one. Actually, no, we couldn't roll it. But when you get into trouble, there's things you can do to get yourself out of trouble, you know? So one of the things you can do when you get into trouble is rolling. So it just buys you more time. If you open up a spread that's too illiquid, it's really, really, really hard to fill if you get into trouble. Why is that? So as these prices, so look at the 105. The spread is 47.51. If this moves into the money, there's less volume here, there's less liquidity, and this spread, instead of being 10 cents or 8 cents here, has now become, what have you got, 15 plus 45, 15. This now becomes a 30-cent spread. So what was a 8-cent spread to fill has now become a 30-cent spread to try to manage, and it's a nightmare. It's a pain in the you-know-what. So when opening these trades, you want to make sure there's liquidity. Okay? Sorry about the rant. This one's just annoying. But Tesla has great liquidity, a lot of volume, a lot of option contracts traded every single day. That one's nothing to worry about. Okay? So cancel this Dollar Tree one. It's not worth the headache, although it would have been a 6% return. Tesla I have no problem with. Netflix, same thing. Netflix, these big names, like everyone knows Netflix. Everyone trades Netflix and Tesla. Everyone trades these. Dollar Tree, yes, it's in the news today because of JP Morgan, but a week from now, no one will be talking about Dollar Tree, okay? And when no one talks about it, no one trades it. When no one trades it, there's no liquidity, okay? Good lesson here. All right. Cool, that's my rant for this Monday morning. Thank you so much for watching. Tune in every morning at 7:15 a.m. on the West Coast, 10:15 a.m. on the East Coast. We go live every morning trading options. Also tell your friends who are trading to tune in as well. Like, subscribe, all that good stuff. All right, happy Monday. See you all tomorrow morning.